Home on the BTC range. Is a range-bound Bitcoin price a good or bad thing? Hi, I'm Andy Baehr with the CoinDesk Indices team. Question: Bitcoin is stuck in a range. Is that a bad thing or a good thing? Even casual BTC watchers will have noted the 10% channel that has held for more than a month. As of today, in fact, it has been 40 days since we entered the $101K, $111K range, with no catalyst forcing a breakout through either boundary. Good or bad thing? The macro muddle supports range trading. Our anchor Bitcoin macro factor remains expectations for future real interest rates, nominal rates minus inflation. Recent crosscurrents create an unclear picture. Inflation expectations from surveys have been elevated, though recent releases seem less concerning. While hopes for Fed relief were dim until the market began pricing in 2025 cuts more assertively. Too muddled for a breakout. Bitcoin is doing what it should. For the store value thesis, range trading is actually fine. As Bitcoin accumulates more days of not unexpected behavior, it supports the narrative of relative independence from other risk assets and improved stability. The S&P 500 has also kept an 8% range through the same 39 days. So Bitcoin isn't alone in this holding pattern, although recent news flows might have knocked a younger Bitcoin off the track. But traders are getting restless. Bitcoin's basement level 30-day realized volatility below 30% crimps opportunity. Implied vols are also down as option buyers grow fatigued and sellers grab yield more confidently. Like any market, a range that holds too long creates complacency, making the eventual exit more exciting than it would otherwise be. The stalled mood is hurting breadth. Without Bitcoin providing leadership, other digital assets are wilting. The CoinDesk 20 index has trailed Bitcoin by about 5% over the past month, as the lack of sentiment has stalled the late April rally, even in ETH, which had bounced strongly. How does this compare historically? With some truly unattractive vibe coding, I take the blame, we studied Bitcoin's longest streaks of holding 10% ranges. The current 40-day stretch isn't the longest, that was 42 days, but it's close. Similar streaks occurred in 2018, 2020, and 2023. Given Bitcoin's evolved ownership structure, ETFs, MSTR, and more accessible spot and derivatives markets, would a 50-day streak surprise anyone? Not sure. Andy leads research and product development of digital asset indices and strategies at CoinDesk Indices, bringing 25 years of global markets and investment management experience to help improve crypto trading and investing for everyone. Prior to joining CoinDesk, Andy was a partner at Risk Premium Investments, an alternative asset management firm serving institutions. Earlier, he held leadership roles on derivatives desks at Credit Suisse, BNP Paribas, Morgan Stanley, and Deutsche Bank, focusing on options, structured products, and systematic strategies. Andy holds BA and MBA degrees from Columbia University. He is a CFA charter holder and holds the CAIA designation. Since 2008, Andy has served as a board member for Goodwill NYNJ.